let's hone in on Access Kenya, specifically a 59% drop in PAT having come through there and being hampered by price cuts and a weaker shilling. Your overall impressions of that headline number that came through?
For me, generally, I think the performance was actually stable, Access Kenya. If you're looking at the income that it raised last year and this year, in the last 6 months, it's actually been stable. The only issue they had was they had an exchange loss. Basically, they said they've actually been borrowing on the dollar terms. They have a dollar loan. So with the shilling weakening against the dollar, we've actually been seeing them actually taking that hit, because generally moved from about 75 to about 80, 81. So basically to them, that's actually what hit them hard.
Yeah.
But in terms of performance, they're actually doing quite well. I think for me, at these levels, the stock is actually still fairly good to buy.
So with that being the case, and the fact that, you know, it's their long-term dollar borrowing that's presenting a bit of an Achilles heel here, how are you viewing their current debt level in particular? Is it at a sustainable enough level, or does it present somewhat of a concern for you?
For me, I think it's actually at a sustainable level. If you're looking at how much they've been making in terms of revenues coming in and in terms of how much they're paying out in terms of their loan, I think basically they should be able to actually meet the cost of doing that. And actually, I think they should also look at restructuring some of these loans that we see people taking. If you see a slightly gain or weakening of the shilling, actually you should be able to actually advise your bankers on what direction to take when it comes to these foreign-based loans. Because you're also seeing the same issue happening across the board. Basically, Portland Cement also has the same issue with a yen-backed loan. So they are also having issues when it comes to when the shilling actually strengthens on weekends. So basically, going forward, I think they'll actually look at a way of actually reviewing this debt and actually finding ways of either converting it into a local currency or converting into another currency that is actually more stable for them.
Of course, when it comes to prospects, what is brightening that outlook picture is the fact that the company is a shareholder in the Team's submarine cable initiative. It also leases capacity from the Seccom project. What kind of contributions do you see these investments making to the company's bottom line moving forward, and how soon do you see it paying off in the form of return on investment?
That is actually quite one of the investments that actually will add to the bottom line. Looking at going forward, costs are coming down. We've actually seen the Communications Commission actually trying to lower rates. And also, we may actually see this adding up onto the books. Once this thing is up in line, once everything is running smoothly, we actually see them actually having more customers coming on board, and this definitely will translate to a positive bottom line for the company.
Very quickly, before we go, a quick look at NIC. The market seeming to react very positively to those numbers. Yesterday, H1 profit up over 50%. So largely positive there. But to bear in mind is that it's net interest income, again, that has come in as a strong contributor as loans and advances rose. Certainly not shying away from lending. The question is, who are they lending to, with risk still very much a factor that banks have to consider in the form of non-performing loans?
If you've noticed in the past 6 months or so, rates has actually been coming down. Government borrowing rates actually come down. If you see the T-bill rates actually below at around 1%, government bonds rates actually coming down. So we're not seeing most of these banks actually channel most of their funds to invest in government securities. We're actually seeing people actually reducing, most of these banks actually reduce their lending rates, and actually seeing people actually taking more to borrow. That's actually an indicator that shows that the economy is actually growing. The economy is actually picking from the past year and all that. If you notice that most of these banks, a good example, things like what Coop Bank, you saw it announced like 2 weeks ago. I think last week we saw the loan book actually grow, deposits grow. Basically, we're actually seeing a rebound for the economy. Real estate is actually growing. We're actually seeing more people doing that. Asset finance, I think that is one of the major sources of income for NIC. They've actually taken a lead in asset financing, and we're actually seeing more and more growth in the economy, basically trickling down to these banks. So they're actually lending out most of this money to not only small scale clients, but also to entrepreneurs that are actually growing.